Are you a non-resident Pakistani dreaming of investing in property back home? Great news! There's a special tax provision that could save you money and make your investment journey smoother. If you hold a Pakistan origin card or national ID card for overseas Pakistanis, you've got a unique advantage under the Income Tax Ordinance 2001, Clause 111 AC. Typically, non-residents face complex tax calculations when purchasing property in Pakistan. But this clause is a game changer. Here are the key points. You're exempt from additional tax collection mechanisms. Reduced rates apply even if you're an inactive or non-filer, and it applies specifically to property transactions under Sections 236C and 236K. Let's break down the advance tax you'll pay during property transactions. First, at the time of sale or purchase, tax is collectible at the time of payment. The rates are specifically tailored for POCI and NICOP holders, with lower rates compared to standard non-resident tax protocols. Now, let's talk about the tax rates for residential properties, for commercial plots, and different slabs based on property value. To benefit from this exemption, ensure you have a valid POC or NICOP property sale, or purchase documents and proof of non-resident status. Pro tips: keep your POC or NICOP updated, consult with a tax professional familiar with overseas Pakistani regulations, and maintain clear documentation of your transactions. Investing in Pakistan just got easier. This tax provision is designed to welcome you home, support your investments, and reduce your tax burden. Call to action. Consult a local tax advisor, verify your specific transaction details, and start your property investment journey with confidence. Always consult with a certified tax professional for the most up-to-date and personalized tax advice. Regulations can change, and individual circumstances vary. Thank you for watching Tax Dosti YouTube channel video. Investing in Pakistan. Simplified, supported, successful.